Hello, hello. Jenny Bowling here with Pivot to Prosperity, the podcast brought to you by Pivotal Real Estate Investments, where we help our investors build wealth and income through passive income, that is, through commercial real estate that improves communities. And today we have Tim Little as our guest. Tim, welcome. Thank you for coming.
Hi, Jenny. Thanks for having me on. It's great to be here.
Yeah, I appreciate it. I'm going to read your bio because I think that's the best way to make sure that we don't miss something up front here. Um, Tim is the founder and CEO of Zana
Zana.
Investments, a Tampa-based real estate investment firm named after his two daughters, Zara and Lana. I should have read that first. Yeah. He's passionate about helping his fellow military veterans escape the landlord trap and get competitive returns by providing opportunities to invest passively in apartment buildings. Tim started investing in real estate with a duplex in 2014 and has grown to a portfolio of 693 co-owned units valued at over $90 million. Yay. Practicing what he preaches, he also passively invests. He has an MBA and has served several years as an active duty Army officer, a strategic communications consultant, and head of multifamily communications for the Department of Housing and Urban Development before transitioning full-time into real estate. Tim is also the host of the top-rated podcast, Journey to Multifamily Millions, where he talks with experts in the field of investing in multifamily properties. Outside of real estate, Tim is commander of an Army Reserve Public Affairs Battalion based in San Antonio, Texas. In his free time, he enjoys taking in all the fun and sun of Tampa, Florida with his wife and daughters. There we go. Welcome again. I love your logo too. It's very eye-catching.
Oh, thank you.
Yeah. So, tell us a little bit about where you're from and your upbringing to start with to get you to where you even went in the service.
Sure. So, kind of bounce back and forth. I'm a Northeast kid between Connecticut and New Jersey. You know, the whole parents were divorced, so hopping between the two. But ended up in New Jersey all the way up until about middle school. And then we moved down south. So finished out high school in Deltona, Florida, which is a real place. People always think I'm saying Daytona. I'm not. They are in the same county, but I went to high school in Deltona. And within, I think, a month after graduating high school, I was off to basic training. And so I went into the military, was there for about 2.5 years. And after that, decided, you know what, maybe the military isn't the right thing for me from a long-term perspective. And I was ready to go to school just like all my friends, right? So I got out and I went to Florida State University, where I ran into an ROTC recruiter, and he said, you may want to think about the military again. You know, you've had some experience. Maybe you'd be a good leader. And he's like, oh, by the way, you'll also have a guaranteed job when you graduate. And I was like, okay, maybe we'll think about this. And so I joined the ROTC program. And when I graduated from there with my degree in international affairs, I got commissioned as an officer in the Army and did about 5 more years active duty after that. And again, decided it was time to get out after multiple combat deployments. I was ready to take a knee and start learning again. So went back to grad school at the University of Denver, where I met my lovely wife. And once I finished up there with my dual degree in, basically international trade and an MBA, wound up moving to Washington, D.C. for my first official job after graduation. And that's where my real estate journey really started, because it was, one of the first times in a little while where I had some extra money left over. I did have significant amounts of debt after grad school. We could talk about that. But exactly because I had so much debt is why I wanted to start saving and investing as well, right? To kind of offset the other. So that's when I bought my first duplex in 2014, and that was in Richmond, Virginia. And That was a duplex that I found after touring probably 5 or 6 different properties in one weekend. We just made a weekend trip of it and wound up putting an offer and got that duplex for 85,000, which seems ridiculously cheap, and it kind of was, but it was in a rougher part of town, and the numbers just seemed to work. And so that was my first foray into real estate investing.
Got you. So let me back you up a little bit too, because that's all very interesting stuff. So your active duty, where were you deployed to?
So I've been to Korea twice, and then I've been to Iraq 3 times now. Um, during the my officer time back then, it was I was in Ramadi for a year during like real combat, and then I was in Baghdad for 15 months during the surge in 2006 2007, and I recently did a deployment to Baghdad in 2018 as well.
So was it pretty rough in those times? I'm trying to
Back then it
remember.
was, yeah, in the 2006, well, 2004 to 2008 time frame, things were pretty rough. Yeah.
Yeah, wow, wow. So have you ever thought about, well, maybe you automatically do, because I know the veterans are good about helping each other get services, but are you in touch with some of those people? Have you done a reunion, or is there automatically some kinds of reunions that help you all to see each other again?
No, not necessarily reunions, but even stuff like Facebook does wonders just with keeping tabs of people and keeping in
Yeah,
touch. So there's folks that I still talk to, even from back in those days. Just saying hi, seeing how they're doing, stuff like that.
good. Yeah, that's good. That's important, probably. And then when you went to DC, you said you had the MBA in international trade.
Yeah, so I had a master's in
Mhm.
international trade from the School of International Affairs, and
Mhm.
then I had an MBA in international business, essentially from the business school. It was a dual degree program.
Are you using that at all in your practice now?
Um, I mean, I guess I would argue the MBA because it is somewhat generalist, right? It's general business skills that it's certainly helped me in putting my business together and some of the considerations
Right. Yeah.
associated with it. Now, do I fall back on like my accounting classes and stuff like that? Not necessarily, but
Oh, no, I'm talking about attracting the international investor.
oh no, and and that's the thing. Like getting international investors in is a little bit trickier. It certainly can be done, but I haven't had the opportunity to help any international friends out yet with investing in multifamily real estate.
Yeah, I bet you'll figure that one out, though. It's yeah. Um, the properties you've gotten into, well, so you got to the duplex. Go ahead and take us to the multifamily then.
Sure. So the duplex kind of got my feet wet, right? And just in terms of dealing with all the issues that come along with these types of properties, tenants skipping out and things breaking and stuff like that. So kind of learned the ropes there. And then at a certain point, I learned about syndication, through like podcasts and reading books, and just kind of got introduced to it in a cursory level. So I
Mhm.
wanted to learn more. And at that time, this now we're talking like 2017, I wound up going to a multifamily conference in Texas and just got a straight fire hose of information for like 2 days. And so much of it was new to me that it was a bit overwhelming. Coming from the single family or small multifamily side of things. But I thought it was really interesting and I thought there was a lot of promise in it. So I was like, okay. And this was right before I was about to go on that deployment in 2018. They're trying to pitch me, their program and all this stuff. And I was like, listen, I'm not going to be around to take advantage of it. So there's really no point in me, getting this mentorship or whatever. So I was like, but what I would like to do is passively invest so that I could earn while I learn. That's how I saw it. I could either spend 25,000 on a coaching program that I won't be able to use, or I can spend that 25,000 in an investment which will hopefully make me money, but I'll also have the added benefit of being able to ask all the questions that I want, within reason, and really learn the process from the investor's perspective. And so that's exactly what I did. I wound up investing right before I went on that deployment in a deal in San Antonio, with Reed Goosens, who you may
Right.
know, and
Yep.
others may know. It was one of his first deals, and that deal, went great. Within, I think, 4 months or whatever it was, I got my first distribution check while I was, sitting out there in the Middle East, and I was like, okay, this is a real thing. Like this actually works. It was kind of that proof of concept that I needed. And obviously, it makes you feel a lot better when you actually see a distribution and you're like, okay, well, they didn't just run away with my money. I'm not going to be on the next episode of American Greed. It makes it real.
Yeah.
And so it was kind of at that point that I decided that I was going to start learning a lot more about it, and maybe even start to get on the more active side myself once I got back to the States.
Good for you. Right, right. And I totally understand that, and I was in real estate at the time I learned about syndications. I it was I'd learned about them before because I bought property for government for years, but 35 years in real estate, and I never thought about buying commercial real estate for myself. It was like have to go through the proof of concept a little bit too, but I did the same thing. I invested first in a limited partnership, and since I'm so active, I'm looking like you are for sourcing deals firsthand, but that's not for everybody, and the majority of the
Oh yeah,
investors are the limited partners. They get the biggest part of the ownership,
yeah,
so
and
they
I'll
don't have
tell
to do
you.
anything, right?
Exactly. And so I'll tell you straight up, my goal is to one day be just a passive investor. Like why wouldn't you want to just have that money doing all that work for you
Right.
rather than having to be on the active side? And yeah, you get equity and stuff, but if I could be in a position where I could just deploy capital and make it reproduce itself, then I would certainly much rather do that, so I could do whatever I want with my time.
That's where I'm headed as well. I like to learn things from the ground up, so I wanna be on the GP side and do some of that, but I'm in my 60s, so I'm not gonna be doing that forever. I wanna ultimately just be an investor passively, and that can
Mhm.
take you a long, long ways. So, yeah, that's exciting. So, and then I believe we talked briefly about that you have investors that are using their retirement money with your investments as well, right? Do you wanna speak to that?
Sure. Yeah. So, I mean, this is another thing that I discovered again, in research and talking to people and stuff, that you can self-direct IRAs, right? Like a lot of people have 401ks, for the military and government folks, TSP, same thing basically. And like a lot of people, I had a TSP, or I can't remember whether it was my TSP or my 401k from a previous company that was just kind of sitting there after I left, right? It hadn't really changed. It was still invested in whatever it was invested in, fund A, B, and C, but I didn't have any control over it. I was no longer with that company, and so someone was like, "Yeah, you could take control of that, and you could like invested in not whatever you want, because that's a there are restrictions, but you can invest it in something like multifamily syndication." And I was like, okay. And so that's exactly what I did, because I have a business, right? I have an LLC, so mine just happened to be a solo 401k is what I transferred my money into. And then I was able to have literally checkbook control of that money. Now you think about it, most people, again, all they're offered is, choose from fund A, B, C, or D within their
With
TSP or
Fidelity or Merrill
401k.
Lynch, right, yeah, all the big guys.
Exactly. And there's not a whole lot else they can do with it. And those providers are not really keen to let that money go. But once you have left that company, or that organization, then you can roll it over into one of these self-directed IRAs. And again, you can invest it in something like this, apartment buildings, self-storage, whatever the case may be. And you could get much better returns than you would be seeing at, whatever was in previously, most likely. And that's been my experience anyways. So I invested mine in a syndication during like COVID that, was planned to be like a 3 to 5 year hold. And it was like a little over 2 years. They met their goals. And so return of capital. I was like, okay, let's do it. And so what did I do? I deployed that capital again into another deal. And I've also done, like basically hard money loans with that money, which a lot of people don't realize you can do. But now most of it is tied up in multifamily syndications. And I just don't really pay a whole lot of attention to it. Don't get me wrong. I read the investor updates and stuff like that, but I feel like I can take a little bit more risk and diversify a little bit more because it's retirement money. I'm not going to get to touch it anyways. So I'm going to make it work while it's doing its thing.
Right. And yeah, you just hit on something that I try to explain to people that they don't understand is that there's so many different asset types. You can take a self-directed IRA um and invest it not just in multifamily but self-storage. You can diversify it across asset classes and even invest in businesses, gold, lots of things. The big thing is you just can't have it in your own possession. You have to have a custodial relationship with certain things and have there's some rules. But yeah, it's really very powerful to take control of your own retirement money. And
Yeah. And
have
that's the thing. I think it's the empowerment aspect, right? Like, why shouldn't you have control over your own money? And so for like the military folks, the way this, plays out a lot of times is if they retire after between 20 and 30 years, they have that TSP sitting there and it might have a nice little chunk of money in it, but they may not roll it over into their next employer and then they just kind of forget about it. And so, I tell them like, hey, yes, you can roll it into a self-directed IRA and put it into, all of these wonderful assets. Like you said, there's rules. You can't buy yourself a vacation home and Airbnb it sometimes and then go hang out there yourself. You just can't get direct benefit
yeah,
from it. But generally speaking, as long as you're smart about it, you can get pretty good returns.
right, for sure. And so one of the things that a lot of people have tried to do is define who should have that checkbook control. It's not for everybody because if you don't know how to follow those rules well, you don't want to risk losing the rights to call that retirement money that is potentially, if it's deferred, as far as taxes, that's one thing. And then it could be a Roth. I have mine in a self-directed IRA and I have a Roth. And you don't want to chance doing something wrong and losing that protected status of retirement money. So sometimes you're better not getting the checkbook yourself, but let the custodial company review and approve all your deals and then they issue the money. But and you got to figure it's going to take 2, 3, maybe 4 weeks. So if you're going to use retirement money, right, you better get started from the day you do a soft commitment, get things started, right?
Yeah, and I've seen some companies do it surprisingly fast. Like with an investor I had, he was like, "Hey, I want to use, this money," and so he was able to use one of those providers, and they were very like white glove service, right? They did everything for him. Um, they're like, "Just give us your information," and so they became kind of the intermediary between me and him, and they did exactly what you're talking about.
Right.
They're the ones who set up the payment and did everything else. That way, all he had to do was just sign his name on stuff, right? They reviewed the documents and made sure everything was right, had the right information, because that's where it gets like squirrely, like how you're signing and, a person versus the account itself. So they helped him with all of that and they were able to get it done in like less than 2 weeks. I was really impressed.
That's good. Yeah, it really is, right. Let me mention something too. that was interesting. Are you familiar with the name New View Trust?
I think I've heard of it.
Okay, yeah, they're right near me, so I like those guys a lot. I really do. That is where I got my self-directed IRA though, and I did take it to Merrill Lynch because one of the guys that used to work at New View now worked at Merrill Lynch, and when he was going through training, they were looking at the list of all the different kinds of accounts they do, and right at the bottom is RCMA. And he said, "What about that one?" Because I didn't talk about it. And they said, "Oh, we don't really use that one." And he said, "Why not? I know all about that one. That's the retirement fund, right?" It turns out that Merrill Lynch does have a way for you to put your money there in a self-directed fund, to self-directed account, and you can put it in stocks and whatnot while you're waiting for the right investment. It doesn't have to sit idle.
Hmm.
So, yeah, that's a wonderful thing. You just have to find somebody at Merrill Lynch that knows how to do it, or I can tell you how to find the guys that know how to set those up, but they don't advertise it because they don't make money on it.
Exactly. And
Right.
that's what people need to understand, right? Like they make money by being the custodians and all these the fees associated with it. So if they're not the ones moving your money, they don't get any benefit from it. So why would they be incentivized to tell you how to look elsewhere?
Yeah. Yeah. So, and I keep thinking they're gonna grow that. I don't know if they have or not, but so I've had mine there 3 years now, and, anyway. So you also have, on your, list of things that familiar with, or like to talk to people about is the 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 military, vets that are looking for things to do. How do you reach them? Are you finding that challenging?
So I mean, a lot of
To do with money,
my
I'm sorry. Yeah.
yeah, a lot of my networking is through LinkedIn. That's a great resource, and then Facebook as well, right? Because a lot of old friends and coworkers are on there as well. But what I see as the advantage for former military, or, retired military folks is that a lot of times, they only stay in one place for usually 3 years max, right? And they're a lot of them are savvy enough to know that they should be renting out, properties, um, when they leave. So a lot of them will buy a property, even if it's their residence, and then when they leave, they'll hold on to it and rent it out, and then they'll move to the next place after 3 years and rent it out. So I know a lot of folks who have, you know, 3 to 5 properties, but these are mostly single family homes. And so they're using property managers geographically dispersed. And so it's definitely better than doing nothing. And I'm not trying to dissuade anyone from that path necessarily, but as they go on, they're like, hey, I'm not seeing necessarily the returns that I thought I would because they weren't buying it as an investment. One, but two, they're having to deal with all the issues associated with being a landlord. And so at a certain point, they're just like, you know what? That's why I call it the landlord trap, because they get told that, hey, this is the way to build wealth. Just keep buying single family properties over and over again, because that's all they ever talk about on Bigger Pockets and stuff like that. But at a certain point, they don't feel like dealing with all the hassle. And so an alternative to that is, getting the cash associated with those properties and putting it into something that's much more passive, where they could still get the tax benefits, the obviously financial benefits of real estate, but be very hands off and not have to deal with all those headaches.
Right. So true. So, so true. And same with the people that I was telling you about, my peers, so many have retired. They've been in real estate for decades, but doing it differently. And then it's too hard for people to realize you can really benefit by owning and not have to do anything. It's just like you can't believe it. And I get that. I really do, but That's why I've researched it so much and built a whole business around it because I'm trying to educate people, open their eyes, it's like probably won't last forever, but,
Hmm.
and what made a difference for me truly, Tim, was, the job because I was trying to say, "How come I didn't know about this? Is this a scam?" Right? The Jobs Acts of 2012 and 17 really was what gave a rebirth, is what I call it, to syndications, and
Hmm.
they've been trending because they're so successful. People are telling their friends, "Oh my gosh," so it's
Yeah,
taken off.
absolutely.
Yeah, yeah. So, you said that you had a closing not that long ago, right? Did I hear you right?
Yeah, probably couple months ago now. We closed on
Okay.
a property in South Dakota, and I wouldn't have looked at South Dakota in the past. I was a little skeptical at first, but once I dug into it, I realized there was a lot of demand there, but not a whole lot of supply necessarily. Right? It's not those hot markets like Atlanta and Phoenix where builders are throwing stuff up like crazy and kind of filling the gap. So buying a property out there in a place like Rapid City, for example, you can maintain very high occupancy and continue to raise rents because there's just not a whole lot of supply there. And so this was a class A asset that we wound up getting our hands on, and I think it's like 236 units.
Mhm.
um, and it's a beautiful property, and it stays like 97% occupied consistently. When we bought it, it was 100%. But even now, it's never dropped below like 97, because again, just the the demand is there. So now I'm starting to look closer at some of those like secondary markets that I hadn't really thought about before. Maybe even stuff in the Midwest like that, um, and get outside of my usual Sunbelt bubble, which is Georgia, Florida, and Texas. Which I still love those markets. Each one has its pros and its cons. And I would obviously love more to invest in my own backyard, so that I'm closer to the assets. But sometimes you just have to go where the deals are, and so that's what we're doing.
Right, and I'm right there with you. I'm in Orlando, you're Tampa, so we know it's been really overheated here in the
Yeah.
state for the last couple years. But, let's just touch on to put a bow on this as we wind up that, the philosophy that you are using is a little different for different asset types. Usually, are you going for a value add situation?
Yes, generally it's like class B value add. Maybe it's like a 90s vintage, and a portion of the units have been updated but not all of them. So we're able to go in there and do renovations, maybe add an amenity that wasn't there, like a playground or a grilling area, something like that, that really adds value to the property and makes tenants more willing to pay higher rents. But
Yeah.
we're kind of getting away. We did have some I would call them class C properties, maybe B minus, but we're trying to get away from those just because it can be much more management intensive the lower down that scale you go, and we're just not seeing the rewards for it. Sometimes it's a risk reward trade off, but we're not seeing the rewards associated with that risk. So now we're skewing more towards class B, and in the case of the Rapid City deal, class A properties.
And when you're doing a Class A property investment, what was the strategy used for that one?
Yeah, so that one, it's not as much value add. I mean, we are obviously improving some aspects to it, right? You know,
Operational
uh,
efficiencies, that kind of thing?
yeah, there's different things like adding key fobs, and for tenants, and updating the workout area, and stuff like that. But it's not to the same level, in terms of like remodels were needed on a lot of the units because it's so new. it's just not, there's not a whole lot of interior renovation that's required. So it focused more on like the landscaping. One of the things the tenants really wanted was more lighting, because there's like a trail around the property. So stuff like that that the tenants were asking for, that maybe just wasn't thought about before, but from the previous owner, or hadn't been done. And
Yeah.
so it's just kind of keeping up. Once you get to the class A, it's more about like, okay, what are the new demands that tenants
Yeah.
have, or expectations, and putting those things into place and trying to find the unique things that you can put in there to make it even more attractive, for people, going into the future.
Right. Because the bottom line is we want to make the bottom line more profitable to increase value.
Right.
So, exactly. Right. Right. Well, very good. Well, so we probably got to wind it up here. I meant to warn you. What I ask everybody at the end is if there's a pivotal person or event that they would say has made a big difference in their life. Is there something for you?
I mean, I guess I would probably have to say, the birth of my daughter slash daughters, because as any parent know, children have a way of changing your priorities. And it's at that point that I really started to think more long term, in terms of like even investing and providing. Whereas before it was like, oh, I have a job that pays pretty decent. It's enough for me to get by and do this and that. But once you're like, oh, well, now I need to start thinking about, someone else's college bill, and, saving for my own retirement. And, it just kind of lengthens out that perspective and that timeline on how far you need to start planning out, and that changes your priorities. And so I would have to say, yeah, the birth of, well, my first daughter, and then just double that with the second one.
Right. Yeah, I get it for sure. I have two of my own. Well, very good. Well, so tell people how they can reach you. And remember, this isn't just video, some of it's Spotify and iTunes. So say it as well.
Sure. So anyone can email me directly, Tim at zanainvestments.com, or they can go to the Zana Investments website. It's just www.zanainvestments.com. If they want a free gift, they can get my passive investor cheat sheet, which is basically just a short little dictionary, with clearly explained language on the top terms that they need to know to be a confident investor in multifamily real estate. And just go to, like I said, zanainvestments.com/cheat sheet to get that. I'm also on LinkedIn, so please connect with me. I try to post a lot of valuable content on there. And go ahead and check out my podcast if you like podcasts like this, Journey to Multifamily Millions.
Very good. Well, we'll put that in the show notes as well. And so thank you very much for coming. I really appreciate it.
Thank you, Jenny.